Good morning, everybody. I'm Mark Sperling with T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. This morning, stock futures are pointing to an up open despite a weak bond auction out of Spain this morning. We'll get more earnings results today, but the focus will also be on existing home sales and the Philly Fed. What are you expecting going into today?
I think we're now getting our second or third gap up, so I think you got to be a little bit more cautious on the macro trend. But right now we're getting into the thick of earnings season, so it's really about stock selection at this point in time. So with this gap up, you definitely have the ability to get possibly to the 139 level on the spiders, maybe above 1385. But overall, I'm going to take a step back and let really the stock selection play itself out a little bit.
Right. So we are in the middle of earnings season, and last night we got a result from IBM that was better than most people had expected, and they raised their earnings guidance. What are you seeing in that chart? What do we do from here?
Well, I think the telltale was Intel yesterday. I think we got to go back one day and see that Intel came out with earnings. Everybody was priced. It was priced basically for failure, and it surprised, and it obviously that along with the other semis came up. It had a nice move. It's now going to be, touching its 200-day very shortly. And IBM came out. It's now over its 200-day. It's around 193 when I came in this morning. Looks good. At this point, I'm not going to be buying it at 193. I'll let it rest here a little bit. But looks good. It's going to get others in the sector probably going, and I think it's important to really recognize what's happening. If stocks beat, or if they're even missing earnings, it seems like we're getting a little bit of uptick either way at this point.
Which has been kind of surprising, I think.
Which is a little bit surprising, yes.
A lot of people were expecting a really disappointing second quarter earnings results from the slew of things. But speaking of IBM, do you want to take a quick look at Microsoft too? They're going to report after the close today as well. Well,
Microsoft's been one of my stocks that I keep saying it's been in a, I'll put up a monthly chart just so we all can see it for 2 seconds. Hasn't done anything for 12 years. Popped its head up earlier this year a little bit, moved up from the 25 level to 30. It's now been sitting at roughly around 30. I think it's going to be moving up a little bit at this point in time. I think anywhere from 29.50 to 30.50 is the buy area. Certainly from an investment point of view, and even from the trading point of view, that eventually it works itself to new highs.
Now, another group that I know that you've been looking at is retail. These guys have sort of repaired themselves from the damage that had been done in June. Let's take a look at Nike, because this is one that got really beaten down with earnings on June 29th, but since then it's been kind of moving upwards. Stephanie Link at Action Alerts Plus owns this one. She likes it because the multiple is pretty cheap at 15 times, which compares to its historic average of 21 times. They've got new products coming in the fall that are going to help this one, and a strong balance sheet.
Case in point, it's Nike. Who doesn't know Nike? And the key is, we understand why it was down, missed earnings, but it's Nike. And you like to buy the best in breed, whether it's retail, whether it's consumer driven, best in breed on discounts. Obviously, Nike had a discount at about a little over 20% discount. You look for it to consolidate over the next week or two, obviously. And I was talking about it yesterday or 2 days ago. It broke above the 92 level. I think it was the last Wednesday, it looks like. Consolidated for a few days, and then yesterday there was an actionary event for this to begin to fill the gap, and the gap should be filled around 97, 98. So I'm looking for some more continuation to the upside. That also got some other retailers on the move.
Costco's been a great retailer the whole year, pretty much. What are you seeing in that one? It is up there.
It's at yearly highs, and right now they're going after big caps. I mean, you just go down the list. You have Target, you have Costco, you have Walmart. You have these cheap retailers that really just are in play at this point in time based on economic conditions worldwide at where we're at. And technically it looks great. I like to look at it weekly once I see these stocks at yearly highs. And you can see it's been consolidating over the last month or two. I think you're going to probably see a tag of 100 very shortly in Costco. And I think that will help other retail stocks that have been consolidating in the mid-range at this point.
Okay, $100 on Costco. I like it. All right, well, we're going to get into all of this and more in the long-form version, so stay tuned for that.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.